Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Jack T., Brent S., and David V. Two new guests are on the show today. Andreas Becker and Peter Krah have joined us. Andreas and Peter are founders, managing directors, and shareholders of German Mining Networks, a private natural resource-focused fund that invests and speculates on primarily Canadian and Australian listed juniors. You can learn more about the group via their website, german-mining.com. Andreas, Peter, thanks for coming on the show.
Yeah, thank you. Thanks for having us.
Pleasure being here.
Well, let's kick it off here, guys, with maybe just getting each of your backgrounds to introduce the audience. You're probably new to most of our audience. Andreas, let's start with you.
Yeah, both of us are coming from the finance world. We met Peter at university, and then we studied finance, worked briefly in the financial industry at major banks, but then soon realized that we wanted to move something and want to be more entrepreneurial. And that's when we started German Mining Networks in 2012. And it all started with the conference in London organized by GADA, where we met people like Ian Gordon, Eric Sprott, and they got us going. And then we flew over to Canada, visited a gold mine, took our first client to Switzerland, and build a business by bringing Canadian mining companies over to Europe, arranging private placements, getting investors involved, and making ourselves and investors money. And it has been a fun ride, and the best is yet to come. We are really entering a great bull market now, and looking forward to the next years now.
Yeah, that's interesting timing on when you guys got together here and started this up, and what you guys have experienced over the last, call it 10 years at this point. Peter, when did you guys meet, and talk about your background a little bit as well, come together here as far as the objective of the company?
Yeah, in hindsight, it looks like it meant to be. As Andreas said, met in university, always kept in very close contact, and already back then shared the same vision on investing and basically making money. And then the junior sector seemed the perfect vehicle to strike it real rich in a short amount of time. What really got us going was the site visit in British Columbia. Being on site, just couldn't get away from this beautiful sector. And despite growing it or building the company in a tough market, already generated some profits with certain turnaround stories in the junior producer space. And that really set the fire apart. That didn't let us go until today.
Talk about that heat, though. You guys probably felt pretty good, as did I, from 2012 through 2015. How'd you guys manage that time frame? I'm sure there were some moments that you guys didn't feel very good in the stomach. Maybe just talk about that and how you guys, really learned coming out of that time period, as did I.
One thing we probably did different from right at the beginning, for us, it was always a people's business. I mean, a lot of people talk about the mining sector being a people's business, but we followed up on that, and from day one acted and traded in a heavily concentrated manner. So we never had more than 3 stocks in our portfolio, and we only went into these heavy concentrated stocks after we've met the people who are running the companies personally. And then just always had a very good gut and belly feeling after sitting down with CEOs and geologists, and that made us profits even in a down market.
During that time frame, talk about where you guys focused in this market as far as exploration type plays, maybe development type plays that took place during that time. It was a tough capital environment. You guys dialed into just a few companies, but what was the focus there? Was it just going through and finding those companies that would still have some type of value, a bear market like we got to experience? What was the focus point?
Yeah, when we did our first investment, 2014, we were looking at a lot of these, we call them fallen angels, the companies that have went down 80-90%. And back in the time, that was mostly the producers, the Allied Nevadas, the Sand Gold, the Claude Resources, the Kirkland Lakes, Lakeshore Golds. And as Peter said, it's all about the people. So we met with these companies in Toronto at PDAC. I remember when we were sitting down with them. And then the company that we made the investment in was Claude Resources. We just felt very comfortable with Brian Skanderbeg and Mark Lepage. They were a young team, and they were presenting us this plan, how they were turning this mine around. And we got in at 20 cents. The stock had fallen from $2. And then over the next 2 years, it has been a fantastic ride because they did turn it around operationally. Then the brokers came back, writing coverage, institutions came back, and ultimately they were taken over by SSR Mining at $2. And so this has been our focus back then, 2014 to 2016, the fallen angels, the turnaround stories, the producers. And I think that has been a wise strategy back then, because exploration and development stories continued to go down until probably 2016 or end of 2015, when we finally hit the bottom and we got the first recovery from January to August 2016.
Interesting story there with Claude Resources. I remember that name. Didn't follow it too much at that time. If I recall correctly, I think Brian's over at GFG Resources, or at least that's one of his focuses here.
That's correct. Yes.
Well, let's talk more specifically about the fund in a moment. But what are your guys' thoughts on the natural resource markets at this point, and what areas do each of you really like over the next couple of years?
Yeah, we like the gold and silver sector. That's really our focus, these two commodities, because ultimately we got into the sector because we think these two commodities represent money and provide stability to the system. And then if you can get involved in the companies, you always have leverage. So that's our passion, gold and silver. And from the company categories, we really still like the producers because it's very easy to value. You can do a simple back of the envelope calculation where you look at, okay, current metals price, current production, or production in the future, and then apply a multiple on it and get to the company value. So this is our focus. Right now, we like a company called Aya Silver. This is another turnaround play being taken over last year by completely new management, 100% silver, the only 100% silver focused company on the TSX. And since we got involved here earlier in the year, they already doubled from $3 to now $7. They're expanding production, and the goal is to get over the $1 billion market cap. The team is top notch. It's the former Semaphore team around Benoit Lassalle, and great management ownership and board management. They own 50%, no debt, all the criteria we want to see, and where we had great experience with the first success we had with Claude. We really see this as a copy paste now with the silver play. And in the gold space, there's another company we like. This is in the development space, and it's called Artemis Gold, run by Stephen Dean. We had the opportunity to present Stephen with his previous company, Atlantic Gold, in Switzerland in 2015, when they were just starting out at 25 cents. And then, followed the story, were involved, and were ultimately taken over by St. Barbara for $2.90. So this has been a fantastic ride. And the team around Stephen is just superb. Their execution is top notch in the industry. They're getting things done on time, on budget, and that's what the market is rewarding. Also with their current story, Artemis, they IPO'd at $1. They're currently trading at $6, and there's more to come. Highly leveraged for future gold price moves. So these are our two favorite holdings right now.
Let me add to your European listeners, Andrew, and I know you're going to ask about how we became aware of Aya Gold. Interesting fact here. On the board level, there is the former CEO of German DAX-listed BASF involved, and also another French billionaire from the biotech space, and that really got us very interested in Aya in the very first place, wondering how is it possible that a German CEO that had nothing to do with mining is all of a sudden involved here on a board level. And then we took a closer look and found that Aya is run by Benoit, and took it from there.
Talk about each of those for a moment. Artemis as well. When did you guys get involved with each of those? Talk about your entry there, and because your guys generally look for entries that are certainly lower level, even in some cases companies that are turnarounds that have been beaten up pretty badly. Just talk about your entries in both of those companies.
Well, in the case of Artemis, as Andreas said, it was basically a follow-on from Atlantic. So we just kept in touch with Stephen, which is generally a good strategy, to keep in touch with people that you made money with prior. And then we were informed of Artemis being his next company, and then we basically got involved on with the IPO. So from day one, and the company only had a stake in Velocity VLC with their Bulgarian assets. And a lot of people were wondering, okay, what is happening? What is the plan with the company? But we had a lot of faith in Stephen, and we knew he's going to buy an asset that is fitting perfect into the current market environment. And he did. And then all of a sudden the stock ran from $1 something to 5, 6, almost 7. So that was a great head start. But I think there's still a lot of value left on the table for Artemis. They're doing a great job, as Andreas said, hitting milestones, always on time, always on budget. So we think it's the perfect stock to own as a core holding in your portfolio if you want to profit from a rising gold market, but also from developments that are happening on a company level.
Yeah, Aya we got in on the market this year in February, when the stock was presented to us from one of the board members, Elena Clerici, and this was around $3. The management had taken over last year in April, when it was trading at 1. So that was the first move, and now they really got going. They accelerated. Lots of brokers, even the major Canadian ones, NBF, were taking on coverage, and they're also hitting their targets to expand production, first to double it and then double it again, expanding the resource, having a drill program ongoing. And this is always what the market likes, whatever companies do, if the management delivers on what they promise. And that's why they had this fantastic performance here since earlier the year, despite a lot of miners going sideways or downwards since last year August, when we hit the highs. So this has been a great outperformance, and it just speaks for the potential, but also the execution of this team again. And we, in both cases, as Peter said, we see strong upside potential. So double-digit prices for both stocks here in the year, in this next move here, which we think is already ongoing. Then it all depends on where gold and silver go. But the best part is still to come with these companies.
Follow Artemis a little bit here, and I've seen their financing come out here, and it seems like they're pretty fast tracked here to get things moving, and looks like it'll turn out to be something that's going to probably catch some pretty good interest, and it seems to be a pretty quick rinse and repeat strategy there that has worked out really well. So appreciate you guys sharing that. And, have you guys done any work on the copper space, any work on the uranium sector? And if so, what do you guys think of copper and uranium, and how do these maybe fit in, or maybe they don't?
Yeah, we largely like I said, we focus on gold and silver. That's what we have done. That's what we are doing, and really our focus. I think what is interesting, how we run our investment is we have core holdings, which is the Artemis and Aya, where you have the leverage to the metals prices, and then you get also the blue sky potential with these exploration companies. And here we like gold and silver exploration companies. So recently got involved into another silver exploration company, being Tier 1 Silver, run by Ivan Bebek, another great CEO. And this one is going to be listed here in May. And that's where we get the 5-10-fold increases by exploration success instead of the production expansion. So our focus is really gold and silver. We do know there are the commodities, like you mentioned, uranium and copper. We don't have big insights into that because we're not so interested. Focus is really gold and silver, and that's where we see the strongest upside. That's why we focus on these commodities, and then also on the juniors in these two commodities.
You guys have mentioned some names as far as management members, and I know you could say management team really is the king first and foremost, and I share that view as well. What
Hmm.
management teams, you guys have mentioned a few, but are there some other management teams that you think the audience should pay attention to and follow?
Yeah, as a general rule, I mean, there's always this talk in town being called, you have to have skin in the game. But what it really means is, or what we always do is, you have to really take a closer look of how much shares is management and board level owning, and also did they actually pay with hard-earned cash out of their own pocket for it. That's the key for us. And then also, if they had previous successes, we always take a very close look of, were they a significant part of that value creation process before, or were they just part of the team maybe, but didn't really contribute significantly?
Yeah, that's right. I agree. And I think to point that out is the actual paying for the shares. We also see a lot of companies out there where the management team didn't pay for the shares and they have a huge amount. So it's misleading in that regard. So you got to make sure that you go back and check and make sure that it's fully paid and at what price did they pay. Any other names do you guys want to share as far as management teams go? Any other stars that you guys see that's upcoming, or stars that you guys continue to like? Any other names you'd like to share there on the management front?
Definitely, yeah, definitely Ivan. Like I said, he's a younger guy in his 40s. On the exploration, and this is in addition to what we said before. They should have previous successes. So Ivan had 2 previous successes in exploration. He's now doing it a 3rd time. Stephen had previous successes in development to production with Artemis, and even before with other Australian companies. Mm-hmm. Same with Benoit with Aya. So this is very important.
Yeah.
Another name we like, currently not having any investments with companies he's running, but still a great name to follow, is Paul Matisek. He used to be involved with GoldX mining for a little bit in the last few months, but GLDX is the ticker here. That's another great name to follow. And then once again, Stephen, we are invested. Benoit, we are invested as well. These are the four household names when it comes to quality people on the management side.
I appreciate you guys sharing that, and cover your extreme concentration approach just a little bit more. I think that's a little bit more unique and not commonly used by a lot of investors out there. So talk about the concentration approach, and then your guys' views on, the thought process that higher returns require more risk, or really if you've done the work, it's actually less risk. But just talk about those 2 items.
Against common belief, or what universities and finance economics tell you to diversify, but actually we think it is admitting that you don't know really well. And we experienced ourselves by really concentrating on few holdings, like Peter said, during times only had 1 or 2 holdings, to think intensely about, okay, is this a company, is this a management team I trust my complete money and that they're going to execute it? And by doing this, we didn't experience these big drawdowns like a lot of investors had over the last 6-7 years, from 2013 to 2019, and instead had fantastic returns, which even blew our mind by over 50% annually.
Peter, what's your thoughts on that?
As Andreas said, it forces you to think really, really hard, and if you are still feeling comfortable, and if you can still sleep well by being heavily concentrated, then you're knowing you're on the right side of the trade. You can sometimes, if your listeners are doing sports, it's a little bit like, you hit a tennis ball perfectly fine, you hit with your golf club perfectly fine, and metaphorically speaking, it's just everything is just in the flow on the company side. And that's also the same feeling we have. We don't worry any single second about Stephen at our team is doing the right job operationally, or when it comes to negotiating a takeover. We just know he's among the 1% of the top 1%. He's better than all of us in doing that, and so why not trust this person all of your money, or a lot of your money?
Right. Yeah, that's interesting. And talk about just the percentages. When you guys talk about your concentration, you mentioned that you have some non-core positions as well. Are we talking 10%, 15%, 20% positions? Maybe just speak to that. And I'm talking from a standpoint of cost basis entry, not what they might represent today in your portfolio.
Yeah, I mean, to cut it really simple, we internally always like to phrase the Pareto law, the 80-20 rule. So you could say it's two core holdings that cover 80%, so 2 times 40, and then maximum 3 to 4 exploration high risk stuff that covers 20% of the portfolio.
And any single position, you guys are probably comfortable up to around 40% then.
Yes.
Interesting.
And even more in the past. We cut down a little bit now, but I think we're still pretty much heavily concentrated compared to the average out there. And then nowadays we even feel comfortable enough to put some leverage on them to profit even more from the upside. And that obviously means an even higher concentration.
So talk about that too. I mean, you guys, it hasn't been all, maybe it has been. I don't suspect it's been 100% perfect. Have you guys had some tough times? Have you guys experienced a couple investments that maybe didn't work out? Can you maybe just talk about, maybe some areas where you guys have learned some lessons or maybe didn't do it right?
Yeah, what we also see is, this is interesting, that when you have a winner, you should let it run. And most people, they try to sell it after they made 100%. And we also had losers at the very beginning, but what we did very quickly is we sold down, or we sold them completely. So I remember in 2014, we, like I said, invested in these fallen angels like Allied Nevada or Sand Gold. But then we realized, okay, these guys, they don't get the job done. So we sold out completely, took the loss back then of 40 or 50% and reinvested into something else. But what most people do is they sell their winners when they made 100% and they keep on holding to the losers and then write it down completely. And I think that's, you cut your losers quickly, but you let your winners run. And this is also something, or an important lesson people should always keep in mind and apply.
What about the other side of that? When you guys take an investment, it's a good management team, the boxes check, everything is good, but the stock maybe declines and you guys disagree with what the market thinks. How do you guys treat that when everything is aligned and right with the company? Do you guys take the advantage of further discount in shares to participate more and add to your position? How do you guys approach that when you know that the overall end of the story is correct, but maybe in the short term, the market sentiment and the price is not aligning with your view?
Personally, if it happens in the short term, I'm actually happy about it, because it really means you can add more, you can steal more value from the crowd and the herd out there. So I personally like it, and whenever the cash balance allows, we add to our positions there. On the mental side, it's really having a disconnection between price, which fluctuates way more than value. Just don't look at it, shut down the laptop, and just think about the company. What is the company doing operationally and its management? Do you like it? Yes or no? If you like it and you have confidence, then you go and buy more.
Fully agreed. And how about the cash side? As far as you guys go here, are you guys 100% invested most of the time? I guess a good example, again, I'd like to go back to is, COVID, March 2020, everybody taking money out of the market, air gap and a lot of these stocks, even though the stories are intact and everything's fine. At that point, do you guys look to bring in new investors with new cash? How do you guys allocate during a time when the value gets absolutely stupid and of course you want to add a lot to your position?
Yeah, last year we remained invested when that happened, 100%, didn't sell anything, and we're using funds to buy even more, as Peter said, because these are outstanding opportunities. And what is also interesting now, this is what we experienced since last year, these disconnects between price and value, they tend to be shorter term. In the past, you could have waited a year to get from this mispricing to the correct value. Now, if there's a disconnect, okay, it happens, but then the market reacts very quickly and pulls price back up. So you get rewarded instantly. And whenever new cash is available and these opportunities come, we are taking advantage of it. It's, like Peter said, you have to have this to be in this sector. You have to be contrarian, and this is where you get most rewarded. And no one believes in it. You have to stay on the trade and buy even more. You have the resources.
Peter, thoughts on your guys' typical preference for size of the company? Do you guys like to stay with stuff that's 250 million or less, 500? Where's kind of that area you guys like to look for as far as that type of size? And then also maybe just speak to the performance.
Yeah. I mean, market cap wise, we feel most comfortable in playing between 250 million, 200 million to $1 billion. I think that's where you get the greatest returns for our investment style. And adding to your previous questions really quick, and it's another recommendation to listeners: if you get additional cash and you want to invest it, don't play around with 5 cents up, 10 cents down, trying to chase the price, getting in at certain limits. This is all too small scale thinking. You really want to think big. You know, when you sell an investment at $25, it doesn't really matter if you bought it $4.95 or at $5.10 or at $5.15. And it once again comes back to detaching yourself a little bit from the stock price too much. You know, the markets at the end of the day are an ego destroying machine, and you want to turn off your ego and make yourself once again aware. It doesn't matter if you buy at $4.90, $5.10, $5. Just get in and then enjoy the ride up.
Just for a moment, Andreas, maybe you can handle this one here. How you guys look at using private placements to get into some of these investments? Obviously, you guys are getting into some of these pre-IPO. Talk about on-market buying. Is it really specific to each investment? And then also, can you just cover your guys' fund performance here and give the audience a flavor for your performance?
Yeah. No, private placements are a fantastic tool to profit even more from this sector, because you usually get the discount to the current market price, and you also get the warrant, which in a rising market is just a performance booster. In the case of Artemis, we got involved in the IPO, and that was a straight equity plus a warrant. And as Peter said, the share price went from $1 to $6. With the warrant, you not only had your investment go 6-fold, but it went 12-fold. And this is the power of private placements, the power of warrants, and nothing can beat that. So if there is a private placement available on the company, and if we have the contact, have met the CEO, then we always get involved through the private placement. The company is not doing a financing, and we still like the story, like in the case of Aya, we buy it in the open market and have the flexibility. But the private placements, especially in a rising market, especially since last year, are super powerful, and everyone that can do it should do it. Can just make complete difference to performance instead of buying it purely on the open market. Like I said, performance has been really impressive despite the down market, and we all know it, being in the sector since 2012, 2013. We had an average return per year of over 50% by concentrating, like I said, first focusing on the producers, these fallen angels, then the new upcoming stories, development stories like the Artemis, and now the Ayas. And we expect that to continue and even to be better, because gold and silver prices will really skyrocket. We haven't seen anything yet, and the reason we got in the sector was because we believed in way higher gold and silver prices, and when these are coming, the whole sector will be revalued. It's still a really tiny fraction of the total global equity markets. Institutional investors aren't really involved yet, and when this money is flowing in, you will see a complete re-rating, and with that, the whole junior mining space.
Come back and talk about that for just a sec. The price for gold and silver. I mean, you guys got to see, gold and silver. Silver at 49, 2011, if I have my time frame right. Gold at 1900 plus. We've gone through the bear market time. What do you guys see as a reasonable expectation? Because in the past, if you look at, past cycles for gold and silver, they've always doubled their prior high. And so do you guys think that, silver a little under 100 and the gold under 4,000 makes sense over the next, 3 to 5 years? What do you guys really see for price? I mean, you guys have to have some idea of where you think the price can go in the long term here. What's your thoughts on that?
Yeah, no, we think the price targets you mentioned, they are absolutely realistic. We would be disappointed if we don't see these price targets. And for us, it's pretty much a no-brainer. We're extremely optimistic on gold, even more so on silver. That's why we got positioned as we described. And it's almost like we're actually basing some of our company valuations on those future high prices, and we think, okay, what are these companies worth if physical prices are going there? And I think that's the attitude you have to have going into the space. We're not investing for 50%, we're not investing for 80 or even 100%. You have to have investments that have unlimited upside. Otherwise, you are not getting the returns we are having so far.
Yeah, I think that's a good way to look at it. There's no reason to be in this sector if you're looking for just those types of small returns. What about wealth protection here, guys? Because you guys have to have a view on this too. When you guys aren't investing in the market, what do you guys do for wealth protection? Do you have any view on the physical holding of gold and silver? How does that fit into your wealth protection strategy? Do you have any thought on Bitcoin as something that is even comparable to gold and silver? How do you guys look at wealth protection when you take profits and you're seeking to store some of that outside of cash?
Yeah, a physical is the ultimate insurance. This is as a cash replacement, and we like that, both gold and silver. And so we always differentiate between safety, which is the physical, and then the performance, which is coming from the miners. And here again, you can apply Pareto's law and they say 80-20, 20% extremely safe in physical, and then the other 80% you can play with in the miners. And that's how we do it. And it ultimately comes down to the risk appetite of the investor. Physical, we love gold. I think it's the ultimate protection. People will rush into this sector, even mainstream.
Yeah, absolutely agreed here. Big advocate of that as well. In this day and age, Bitcoin has to become part of that conversation. I have my views on it, but do you guys have any view on Bitcoin here from a wealth protection standpoint?
The other day, we've seen a chart that is overlaying the Tesla stock to the Bitcoin price, and that went pretty much heavily correlated and in the same direction. So that is telling you something. But no, we don't really have an educated opinion, and we are very happy if a lot of other people are making a lot of money. Your investment also has to fit your personality in a certain way, and it's never really got the ocean boiling, as they say. So not invested in it, but watching it from the sidelines.
One additional note here on the cryptocurrencies, I think what we've seen in them since they got started is an example what will happen in the gold and silver space. The story is the same. You have limited supply, and you have increasing amount of money that gets into the system. So the value of that restricted good has to go up. And we think gold and silver, being the ultimate form of money for thousands of years, should even trade higher and should trade at even a premium. For people who missed the Bitcoin move, they will get rewarded in the gold and silver price move that is to come. So nothing to worry about.
Yeah, I think they have their place, all of them. Is Bitcoin something that's long-term proven? The answer to that is absolutely no. There's a lot of question marks with technology and how that evolves, but there's not many question marks with things you dig out of the ground. And the bottom line of it is, guys, and you guys know this really well, as do I, everything we do is mined, and that includes even growing things. And if you grow things, there's a good chance that the products you're using to grow those things are mined. The lack of remembrance of where this really all comes from. And I want to ask you guys this too, with the tech sector moves, do you see that this market is a market where everything eventually comes down together, or do you see more of a separation like 2001, where tech stocks, the air starts to move out of tech stocks and the air starts on commodities like we saw in 2001? How do you guys see that taking place? Is there a rotation here? Do you think there's a rotation, or do you think when this market comes down, everything goes with it, irrespective of the sector? What's your thoughts?
Well, people are more awake, and they're now realizing what the value is. And we expect something similar like in 2001. And also like in the 30s and in the 70s, you could always see, when the steam got out of the mainstream markets, or now the tech stocks, then the resource stocks, the commodities started to move. And I think that's going to happen here as well. And this time even more, because everything moves in certain ways. The tech sector, this bubble has been blown up and now it has to reverse, and the commodity markets will have a fantastic rally, and we'll see really what we've seen in other sectors happen in our sector now, and we can really look forward to this. So no, we don't think that when the mainstream markets or tech markets go down, the commodity market doesn't go down with it. Instead, it will go up.
I think this is an interesting time to be placed in these sectors,
Yep.
both from the base metals, the precious metals, and even energy. There's a lot of things to look at here, and I think it's really just pinning down what the best performance profiles are. And I think gold and silver are two of those really fantastic performance profiles. And there's a few others, but it's a matter of selecting the best performance profiles. Given our time and research in the uranium sector, we also believe that uranium will compete with the likes of silver as far as total performance. How about your guys' fund here? Let's talk a little bit more details. Can you maybe just explain the structure of your guys' fund, the size of it, if you can share just a ballpark size, and then maybe just some of the requirements if you guys are open to new investors? There's probably a few in the audience that would like to hear your guys' structure and how they might be able to get involved.
What people can do is they can join us. We, as we said, we started out investing for ourselves, then expanded to friends and family, and now got some outside people in Europe involved as well that are investing together with us. And we're happy to take on new investors. They can basically then just copy what we are doing with our investments. We can get them into the private placements or recommend them the stocks to buy on the open market. Yeah, we are looking for accredited investors, obviously. Ticket size is starting at 100K. Yeah, happy to take them on and guide them through the next years in the sector based on the experience we have and based on the results we generated by investing our own money and meeting these CEOs and knowing them personally. I think is a tremendous differentiator to a lot of other fund managers out there. To have invested our own money and to have met these CEOs personally in Canada and in Australia, sitting down with them face to face, okay, reading their face, seeing their body language, okay, is this guy honest? Is this guy telling me something? Can I trust him my money? I think this is a great differentiator and has treated us extremely well. But it's just confirming when it always comes down to it, it's about the people. In everything you do, you want to deal with honest and straight people who get things done. And the people we mentioned, or the CEOs we mentioned, they're definitely fulfilling these criteria. And I think that's why we made money with them.
Just adding one more point, investors stay in full control of their own money. So we actually just manage our own funds and money internally, basically our own fund. And then when investors want to invest with us, they stay in full control of their own money. We just advise them and helping them to invest the way we do. At the end of the day, helping them to become better investors and making money.
Peter, talk about the size if you can. Just give us a ballpark. You don't have to give us, actual numbers, but talk about maybe the size of the fund. I suspect you guys have some type of a fee. What's the details on that?
Size of the fund, definitely 7-digit figures these days. Quite proud to say that. And when it comes to fees, there are no fees for the investors. We just enjoy doing what we're doing, helping to make investors money. And then when it comes to placements, we channel funds into our favorite companies through private placements. Then obviously there is the classical finder's fee that we get from the companies, but the investor is not getting charged anything.
I think that starts to show some alignment with what you guys are doing with your investors, and not having a fee associated is certainly a good thing here. So what else can they do as far as investors? I know you guys have some articles on your website. Is there a mailing list for folks just to follow you guys initially and then maybe start a conversation? How can they reach out to you guys, and can they sign up on your website? How does that work?
What people can do, they can send us an email to pp@german-mining.com, send us their phone numbers. We always like to talk to people, get them on the phone, or if possible, even meet them personally. Nothing is better than a personal meeting. And then we will send them our selected private placements every once in a while. And then obviously they can also check our website, can check our blog. But as you already noted, we stay a bit under the radar there and only publish things occasionally. We don't think there are things to talk about every other week. So if we put out things, we want it to be of very high quality. So therefore, maybe one article a month. And if investors want to talk with us in the meantime, they can always send us an email to pp@german-mining.com.
That's great. And I certainly agree with that. Less is more when it comes to these types of things. So on that email list, there's no cost for that, and to connect with you guys, getting that set up, and then occasionally getting a private placement recommendation from you guys, there is no cost for that. Is that correct?
That's exactly right. There's only minimum investment amounts of 25,000 Canadian dollars, but that's it. Low entry barriers.
Well, look, I want to give a quick shout out to one of our longtime members, Chris P., setting up this discussion. I really appreciate him taking care of that and getting that set up. Gentlemen, it's really been good to chat about the sector. Thanks for the introduction here. And again, thanks for sharing some of your wisdom with our audience today. Stay well, and we'll do it again sometime.
Yes, absolutely. Oh, thank you, Andrew. It's been a pleasure. And yeah, looking forward to the next month here in our sector.
All the best to you and your readers.